Welcome back, my assets viewers. I hope that last video the fund manager spoke about a lot of sectors and trends. I think probably you could have seen that, could have enjoyed out of that and also could have taken some benefit out of it. This time what we are going to see is that one of the reader was reading one of the articles and then they called me up and then said, sir, I'm just regularly watching your review. I just read one of the article. I just want to get a clarity from you. So his question was that the US Treasury yield is going up, Sensex earnings is also coming down. Do you expect market to get corrected? That was his questions. We always see that whenever the Sensex earnings is coming down, normally market should get corrected, isn't it? Because we pay always a premium to buy stocks. When the earnings is getting reduced, naturally the profitability of the company will take hit. When profitability of the company hits, price earnings will go up. Price earning goes up, the earning per share is come down. When both things happen down, naturally the consequence of that, it's that the market stock should correct. When stocks are started to get corrected, the index will also correct. That's all about MD. Sensex is underlying about only a stocks. When stocks correct, the underlying assets corrects, automatically this index also will get corrected. But is it possible that we can directly take the US Treasury yield and try to compare with the Sensex earning and come to conclusion that market comes down? But it is not always happens like that, because so one side earnings is coming down, that's a sign. But you also look at whether the earnings can increase going forward. If at all the Sensex earnings are dropping, it is dropping drastically. What are the factors that contributing to the earnings slowdown? If the contribution to the earnings slowdown is going to stay for longer, it's going to be sticky, probably market might correct. If the stickiness of the reason it is getting corrected is not there, the earnings is not going to be impacted, and because of these are the parameters. Could be some of the parameters like commodity price is going up, inflation is going up, or interest rate is going up. These are some of the fundamental which likely to be impact the earnings. When this is not going to be sticky, probably the market may bounce back. And another point of that, we see US Treasury yield. You know that in 2007 the Treasury yield was around above 4%. After quite long years, maybe close to around 14-15 years down the line, we saw the US Treasury yield this week is jumped to 4.18. Because the Treasury yield has gone up after 15 years time, is it going to seriously impact Indian equity market? Is not there. Why people always talk about Treasury yield and then earnings of Sensex to see that? Because if the Treasury yield is around 4.2 and your Sensex earning is also equally 4.2, for example, hypothetically it's around 4.04, we take hypothetically it is 4.2, what is going to happen? So assume I am an US investor, I have money, if I invest in government securities, I earn a 4.2%. If I bring that money to India and then if I also going to earn around 4.2%, what will happen? That's a problem, isn't it? Because when I move money, I am taking a currency risk. Because the currency risk also I am bringing when I bring in money to India. Because if the rupee get appreciated from this point on, then when I take the money out, I lose money. If a rupee depreciate again, I will have a problem, because when a rupee depreciate, I cannot sell. So that is another issue, that's a problem. So such a situations, US investors, they will all be a little wary to bring Indian money. But by and large, we have to look at it. It's only not about the earnings on a Sensex is going to decide the market. Probably if the earnings of a Sensex is getting hit, but the earnings of a mid and small caps are not getting hit, the market may still flourish. Based on the mid and small cap will try to give a greater return than when compared to the large cap. We also saw that in the last 4-5 months time, the price earning of a mid and small cap is trading at a slightly higher premium when compared to large cap. That means there are people ready to pay some money to buy at a premium the mid and small cap. So when the earnings of Sensex reduces, it's not directly going to crash market. And whenever you see that what is the reason beyond the Sensex earning is going down? If the reason is going to be sticky, there is a possibility market may correct. Because if the reason is not sticky, what is the reason could be the earnings could likely to get impact? Probably the commodity price is going up, the inflation is going up, the interest rate in the systems is going up, and the economy where the consumption end users are going to be there, they are affordable to buy or not. It's going to also the factor plays a major role. What is the difference between 2007 and 2023? Let's see, like in 2007, the world market across globe was really doing exceedingly well. It's not about India, the world market is doing exceedingly well, but 2023 things are completely drastically changed. Except India, other markets are not doing great. Though there is no possibility of other markets to earn, naturally the FII's money has to definitely come back to India. There may be a short-term pullback will be there. They may be pulling back like what they have done in November, December they have done. They have taken back close to around 50-60,000 crore they have taken. The market have corrected by 5 to 10%. But this point in time, what likely to happen when the elections are around the corner, the government will come out with a lot of other facilities to ensure that the economy is being kick-started. Though we have then a short-term inflation pressure on the food friends, we know that all the food items or inflation are going up. So that is going to put a pressure on the inflation. I don't know whether the RBI will rush immediately to increase the interest rates, because normally food inflation will not be sticky, because during the transition on the monsoon, probably there will be some pressure on the inflation, and after the situation settle down, it will come down. And unfortunately now, because Russia is not allowing the commodities, food commodities to get exported, actually there is a food commodity prices is going up. That's why Indian government have went little cautious, then they reduced export of rice and wheat now. And also India is now talking to Russia to import wheat to see that there is a sufficient amount of storage is available, even if the monsoon is not panning out successfully for next couple of more months in entire India. So one side government is taking a proactive actions. These are all the actions will likely to support markets. When these are the actions supports market, there is a possibility market may not correct because of the treasury is holding up. Why treasury is going up is going to impact Indian market? You and me know that the Indian equity market, 75% of the market capitalization, that means 75% of the market worth is predominantly into the large cap. Okay, that means top 100 stocks will definitely have 75% of the market cap. Whenever US investors are coming and invest, FIs are investing, coming and holding it, they try to invest around 40-45%, they hold on to the larger stocks. Because of that, they try to sell. There is a possibility Sensex may get corrected. Because since corrected, sentimentally mid and small cap may also correct. But FIs cannot rush and try to do that, because if they see there is a possibility of earnings growth is going to increase in the next subsequent quarters, they will not rush to take the money out. They may also try to withstand, without withdrawing, they will try to be holding on to their positions. On a fear that some economy changes, the earnings increases, probably they may miss the bus. Okay, so that is why afraid of that probably and fear of missing out the form or normally people are talking, they also stay invested. Given these conditions, I also thought that one side we are looking at the fundamental, why can't we take an input from some people about the technicals? Some of the technical analysts I interacted, they believe that the market have a lot of support level at 19,600, 19,000, 18,700, 18,600. There was a huge support level in the backup for the Nifty. So when the support level is available for the Nifty, then there is a possibility of downside correction is very less based on the technical analysis. So technical analysis is not throwing an alarming pictures. Same time the earnings has come down. This quarter is not a great. Probably subsequent quarter the earnings improves. Probably the market will also catch up with the earnings, because market is slave of the earnings. So when things have changed, probably there is a possibility market may stabilize or going forward. So if I have money invested in the market, unless the specific stocks are not doing good, probably I can. So if I am an investor invested in mutual funds, so unless I foresee market correcting it deeper, I don't take money out. I like to check if market is going to correct 4, 5, 6%, I will try to stay out, because if my money is being in short-term capital gains, I have to pay 15% short-term capital gains, that translates into 1.5%. If my investment is less than 1 year, I have to pay 1% exit load, that adds to around 2.5%. If a market is going to correct 5%, means I already lost 2.5% because I am booking profit from here. So my support is only going to be 2.5%. Is it worth taking risk for 2.5% if you are not able to time the market and bring the money? So my advice to investors, look all these parameters inside, put it in your mind and analyze and try to take a call. This is Suresh Parthasarathy, certified financial planner, founder, mysetconsolidation.com. Some of the sectors you want to have an idea, look at the previous video. One of the fund managers spoke about sectors which is these little skeptic about it, and some of the sectors is positive about that. That will give you some ideas for you to take a call whether to sell or not. So we have put a lot of videos. Please go and see in the last few videos. Our subscriber base itself has gone up by more than 2,000. So I request, if you are a first time viewer to our channel, please subscribe, and if you like the video, please share it. And if you want any video on that, please put it in the comment box. We'll try to see that whether we can able to do such a video on that. This is Suresh Parthasarathy signing off. Bye.